Car automakers around the globe are transforming their business model and dumping millions into the production, design, and development of electric vehicles. Plug-in electric vehicles, also known as electric cars or EVs, derive all or parts of their power from electricity supplied by the electric grid and include AEVs, all-electric vehicles which run entirely off of electricity, and PHEVs, plug-in hybrid electric vehicles which use a combination of plug-in charging and gasoline to run. EVs store the electricity in rechargeable batteries that power an electric motor which turns the wheels. EVs accelerate faster than vehicles with traditional fuel engines. They can reduce emissions that contribute to climate change and smog and even save you money due to lower long-term costs compared to their gas-powered counterparts. Thus, this is why EVs are currently exploding in popularity. Electric cars also can produce zero direct emissions, which significantly improve the air quality in urban areas. Traditional gas-powered cars have a wide range of prices and emissions. Hybrid and plug-in hybrid vehicles are about the same price as traditional cars, but they cut emissions roughly in half. With this transition to EV sector, US President Joe Biden has made climate change and green environment his priority. His administration has issued an infrastructure plan, which gave many promising views regarding the EV market and provided many incentives for consumers to shift from gasoline cars to electric vehicles. Joe Biden has released a $2 trillion infrastructure plan on the White House website called the American Jobs Plan. A whopping $174 billion was dedicated to the electric vehicle market to compete with China. Shares of Tesla, Fisker, and Lordstown Motors were higher by as much as 4% after that, but EV stocks are currently down due to fears of inflation, and old economy value-oriented stocks such as Ford, Caterpillar, CAT, 3M, and Procter & Gamble, PG, have been outperforming tech stocks. Old economy refers to industries that have not changed significantly despite advances in technology. Other examples of old economy industries include steel, agriculture, and manufacturing. Ford, Caterpillar, 3M and Procter & Gamble all have been around for a long time and dominated the economic landscape before the dot-com era of the late 1990s that ushered in an entire industry of new and high-growth companies. Climate change and new technologies impact the old economy, but most of the processes have been the same for hundreds of years. Although EV stocks have been down due to these issues and more, ranging from interest rate changes to microchip shortages, EVs can reach soaring new heights this year. Some analysts believe EV stocks are expected to move 40% higher this year alone. The primary benefit can be utilized by the consumers, as this plan will provide the point-of-sale rebates and tax incentives to buy American-made electric vehicles. Furthermore, it will provide grant and incentive programs for state and local governments and the private sector to build a vast network of 500,000 EV charging stations by 2030. This news can be music to ears for investors who are inclined towards investing in the EV sector, and in today's video we will dive deeper into the EV stocks that may have huge potential due to Joe Biden's plan. Please smash the subscribe button and turn on the bell notification to help with the YouTube algorithm, and let's continue with today's video. Tesla, an American electric vehicle and clean energy company based in Palo Alto, is on top of the list and will have a significant impact on its stock price in the coming years due to this plan. Tesla's dramatic rise last year to become the world's most valued automaker by market cap has drawn a lot of attention from investors. Moreover, this plan could act as a catalyst in Tesla's massive bull run in the coming months. Stocks falling under the EV category will undoubtedly become more attractive to Wall Street under Joe Biden's presidency. This will give consumers incentives and a motive to switch to EVs, which are environment-friendly compared to gasoline. From 2019 to 2020, the market capitalization of Tesla made a gigantic jump of 783% and moved from $75 billion to $670 billion. Tesla's stock rallied more than 750% in 2020, giving its investors an enormous chunk of profits. The bull run has been absolutely remarkable, and shares of Tesla were up almost 756% from the summer low of 2019. It is important to put these numbers in perspective. Tesla delivered 367,500 vehicles in 2019 and achieved its aim to deliver 500,000 in 2020, and simultaneously was worth more than the combined market valuations of America's big three automakers, GM, Ford, and Fiat Chrysler. While Tesla managed to fulfill its target by delivering around 500,000 cars in 2020, its competitors such as Ford managed 2019 sales of 2.41 million cars in the US alone. On the other hand, Fiat Chrysler and GM sold 2.2 million and 2.89 million cars respectively. And Tesla was worth a multiple of their aggregate. The important thing to consider here is that Tesla was already dominating the EV sector partly due to its compelling business model, and with this plan, it is evident that Tesla can hold a greater investment opportunity for long-term investors. Coming to other electric vehicle sector stocks that may show a promising return in future due to Joe Biden's $174 billion EV investment. Another stock that may have a significant impact on its price is Blink Charging, which is an electric services company. Blink principal line of products and services is Blink EV Charging Network, which is proprietary cloud-based software that operates, maintains, and tracks all the Blink EV charging stations and the associated charging data. From 2018 through 2020, Blink Charging stock hit 5-year lows well below $10 per share, stabilizing in the $2-3 range before doubling in value in early July 2020. This jump is leading many analysts to believe Blink may be heading for a buyout with the potential to generate big gains for holding investors. Blink currently holds a market cap of $1.37 billion and the stock price has seen a massive increase from $2 per share to $40 in December 2020. Now, along with Joe Biden's plan to install 500,000 EV charging stations by 2030, it seems as if Blink can be at the forefront to fulfill Joe Biden's plan, and this can be a possible hope for Blink share prices to skyrocket. Another major player that may have a positive impact on its stock price is GM Motors. They are also revolutionizing their business model and switching towards electric vehicles. Though they are way behind in market cap from Tesla and are standing at $85.58 billion, but they have the potential to rise. Over the years, their stock has also increased and shown a tremendous return on investment for their investors. At the start of 2020, their stock was trading at around $20, and as the sales increased the stock price jumped from $20 to $40, which is 2 times more return within a year. The perfect approach to handle Joe Biden's plan is to diversify your investments into various EV stocks. You should not aim for short-term gains, rather focus on holding the investments for a longer time. To summarize everything in the video, Tesla looks like the most promising stock as of now. Tesla has performed exceptionally well over the past years. Many investors gave optimistic predictions regarding its future, such as Cathie Wood stating that the Tesla stock could reach $3,000 by the end of 2025. Joe Biden's climate change plan, backed by analysis of many financial experts, further supports a promising future for Tesla and the entire EV sector. The EV sector is yet to begin its bull run under Joe Biden's administration, and Tesla seems to dominate this bull run. This plan, along with the Tesla Q1 release, undoubtedly holds a positive future for the investors, where Tesla achieved record production, deliveries, and surpassed $1 billion in non-GAAP income for the first time. Tesla reported record net income of $438 million during the quarter, as well as earnings of 93 cents per share on $10.39 billion in revenue. Thanks for watching. Please like, share, and let me know your thoughts in the comments below. I'll see you in the next video about DeFi and why you may want to focus on DeFi.